If you're new to this channel, it's all about Prescott, the housing market, what happens here, where to eat, what to see, and where to go. I'm Lisa.
And I'm Jessica.
And we are the Balanced Real Estate team in Prescott, Arizona. If you're not new to this channel, welcome back. You can find all of our contact information in the description below. And if you could please do us a favor, please like and subscribe because it helps everyone who's looking for this type of information about Prescott find it more easily. In today's video, we're going to talk about assumable loans and what they are. Maybe some of you don't know what an assumable mortgage loan is, or know if your current mortgage loan is assumable. So let's find out. Jessica recently went through this process, so I'm going to ask her some questions. So Jess, tell us, what is an assumable mortgage loan?
An assumable mortgage is one that allows a new borrower to take over an existing loan from a current borrower. Typically, this entails a home buyer taking over the home seller's mortgage. The new borrower, the person assuming the loan, is in exactly the same position as the person passing it on. They'll have the same terms and conditions, the same mortgage rate, the same remaining repayment period, and the same mortgage balance. In other words, it's effectively swapping one borrower's name on the mortgage agreement for another.
Interesting. Why has this become more appealing lately?
Well, when you assume a mortgage loan, you assume the payment and interest rate. With the rapid rise in interest rates, there are mortgage loans out there from a few years back when interest rates were as low as 2.5%, possibly saving hundreds, maybe even thousands on your mortgage payment.
So which loans are assumable?
VA, USDA, and certain FHA loans. When assuming a VA mortgage loan, the new borrower will not need to meet any military service requirements. With that, non-veterans can assume a VA loan. As with the original loan, the new borrower will not need to prove their financial qualifications to the lender. USDA mortgage loans are offered to buyers of rural properties. They require no down payment and often have lower interest rates. To assume a USDA loan, the buyer must meet the standard qualifications, such as meeting credit and income requirements and receiving approval from the USDA to transfer the title. FHA mortgage loans are assumable when both transfer parties meet the requirements for the assumption. For instance, the property must be used by the seller as their primary residence. Buyers must first verify that the FHA loan is assumable and then apply as they would for an individual FHA, that is.
Does the buyer have to qualify for a mortgage loan?
Yes, the buyer must be able to qualify, meaning their credit score and debt-to-income ratio requirements are met for the credit institute that issued the mortgage loan and the loan program.
What if the home is priced higher than the remaining mortgage balance?
In most circumstances, this will be the case. In that situation, it's up to the buyer to come up with the amount above what is owed in cash, usually.
Okay. What happens if I want to assume a mortgage loan, but I do not have the eligibility for the VA benefit?
The seller would have to give up their VA benefit and forfeit using it in the future while you are using it. This could also be a risk if the buyer ever defaults on the mortgage loan. In most cases, the veteran will most likely not want to do this because this is a benefit that comes from their sacrifice.
What are the pros of assuming a loan?
You can get a much better interest rate than what is available in the current market today. The closing costs are often less than applying for a new loan. The VA funding fee is reduced to 0.5% or 0% if the vet is disabled, on the assumption of a VA loan, which is considerably lower than the typical 2.15% or higher for second-time users of the VA loan program. You take over the responsibility of what is left instead of starting over with a 30-year mortgage or having a larger payment on a loan for a shorter term. The house has already qualified for loans, so often there is no appraisal, making it easier for sellers and less expensive for buyers.
What are the cons of an assumable mortgage loan?
You have to come up with a somewhat substantial down payment in most cases. It can take a long time, in some cases up to 6 months, much longer than a typical escrow. You do not get to pick or change lenders. The lender who originated the loan originally or who possibly purchased loan from the original lender is your lender.
Okay.
You may not qualify for their loan due to the lender's rules, and you will not really know ahead of time because you don't get the opportunity to get a pre-qualification letter with that lender prior to having a contract. A veteran may not want to let someone who cannot return their benefit take over the loan because they will lose their benefit, and if the buyer defaults or short sales, this could be an issue as well for the seller.
Got it.
If the loan has FHA insurance, you will be responsible for the insurance with your mortgage payment. If the seller does not pay the payments or falls behind during the assumption process, the lender may cancel the transaction, or it will be the responsibility of the buyer to pay at close of escrow.
Wow.
It can be difficult to get questions answered by the lender during the loan process. Unfortunately, customer service is not great compared to a regular purchase. A lender is not required to issue the assumption on an assumable loan, so the seller will have to verify with the lender first.
As you can see, there are some great benefits to the loan assumption process, but there are also many risks and downfalls. If this is something that both the buyer and the seller are willing to go through and work in good faith with each other, it can be great, but both buyer and seller will need to have a lot more flexibility in this situation than would be necessary with a regular home purchase and mortgage loan.
We hope we shed some light on assumable loans. If you want more information about assumable loans, call your local lender to get more details. Are you thinking of moving to Prescott, Arizona, or planning a trip to visit to see if it's the right place for you? Don't hesitate to contact us. We're happy to help you get to know the place we call home.
Or maybe you already live in the Prescott area and are considering a move out of the area. We can help you get to where you want to be. We have so many people contacting us who are moving here to Prescott, and we absolutely love hearing from you. If you're moving or relocating here to the Prescott area, we can help make that transition much easier on you. So text us, call us, email us, or comment below, and we'll answer any questions you have. Want to start your search for your Prescott area home? Go to PrescottRealEstateAndLiving.com. You can also find your Prescott area home's value there too. And again, please don't forget to like, follow, and subscribe to our YouTube channel, as it helps other people find this valuable information. We post home tours, neighborhood tours, buyer and seller tips and tricks, real estate sales stats, the best things to do in Prescott, and more. Thanks for tuning in, and we look forward to seeing you again soon.
Bye.
Bye-bye.